Hello, hello, hello. Happy, tantalizing, terrific Tuesday to all of you. Um, Glad to be here. I'm on fire, as you can see. Bringing the fire, looking like fire, got some fire, all the fire. That's what we're doing today. So it's Real Estate Tuesday. How's everybody's day going? Hope you have a great start of your day and feeling like some fire up under you, right? We're gonna have a conversation. It's Real Estate Tuesday. I'm always glad to bring some gems and some things to you. We're gonna have a discussion. I'm going to educate you on. Gotta find on some things that I want to share with you. So, like I said, I'm bringing the fire today. I'm feeling like fire. I'm trying to get used to this hair situation because when you go to the store and you think of these hairstyles and you think of these things, you buy things, you like it looks like what it looks in the pack is different from what you actually visualize. So I'm trying to get used to it. So how I look, y'all? What y'all think? I don't really care, but it is what it is. I'm gonna be rocking it. But I ain't even think about it. I'm like, I got red hair and my Halloween costume is purple and black. I'm like, dang it. So I'm gonna have to change my hair again. But that's okay. I like changing it up. I like switching it up. So it doesn't matter. Hey, Big Wade. So, let's talk about it. It's Real Estate Tuesday. And you looking to purchase some real estate? I know you are. You should be. You got to think like an investor. So, first things first, I want to start with drop a one in the comments if you're watching this live. Drop a two if you're new to my live, and drop a three if you're watching the replay. And I really appreciate it. So, under the fluorescent lights of my classroom, coming live from the classroom, as I like to say, I am a real estate professional. I'm also an educator, and I do financial literacy, credit repair, and business funding. So I'm talking about real estate today. Real estate is what are we talking about today? So last week I had talked about some of the best banks to get your home loan. Doesn't matter if you're a first-time home buyer or a seasoned home buyer, you still have grants. Yes, grants that you can use and money out there. The government has given states and cities grants for you to purchase. So I'm going to refresh that first. So I'm in Michigan right now. So what up, though, to all my Detroit people? But I am licensed in Tennessee. So some of the banks that I was speaking of last week, always go to your local banks first. Um, they usually give you the most money and the most bang for your buck, I should say. And you want to get the maximum, even though you don't have to take the maximum, but you want to get what you're worth. Some of the larger banks are going to shortchange you a little bit, and that's okay. You might need to do that, but I'm just telling you, some of the local banks, credit unions are especially Comerica Bank here in Michigan, especially are good banks. So some of the best banks that, according to Money News, U.S. Money News, you have MBKC Bank. Okay, you need a minimum credit score of 620 to buy a house. New American Funding, you only need a 600. Now, you will have to contact them to see if you could qualify for any down payment assistance grants or programs. So usually the down payment assistance programs, you have to have a 620 or above or a 640 or above, depending on the program. Then you have First Horizon at a 620. They have 0% right now. If you have a First Horizon in your area, I know they have them in Michigan and they have them in Tennessee. If you have a First Horizon in your area, they're doing a 0% down program right now. You can buy a home with no money down, but you do have to have money saved. So that is at a 620. And Chase has a program now too that they have a first time. If you bank with Chase, I would definitely. It's good to have a home loan with somebody like that. But like I said, they are a larger bank, so you might not get as much, but you definitely need to shop around. So like I said, you're looking for home loans that you can get grants from. Now, they do have down payment assistance programs where you have to pay it back, and it all depends. And some of these programs have income limits, so you need to make sure that you are looking at those income limits as well. And some of them do have restrictions on where you can live in a particular city, so you need to look into that. So there are great programs out there, but there are some stipulations, so you need to make sure that you're talking to the right people. I watched my live last week. I talked about how some questions that you can ask and how you can speak to people about at these different banks about their programs and who you want to work with. Shop around. There's nothing wrong with that. You shop around for shoes, you shop around for clothes, for cars and things of that nature. Shop around for your home loan as well. Talk to these people at the bank, get a relationship with these people at the bank. Know their programs, know what you're looking for too. Do your own research. Don't trust anybody's research but your own. But I'm here to educate you on the things that I have knowledge of, but you also should do your own research as well and ask the right questions. So I went over last week the right questions to ask when you're talking to a mortgage lender. So make sure that you look into that. So that was Michigan. So you talking about Tennessee, because I am in Tennessee. Like I said, First Horizon, resident, was it resident? I can't think of the name of it. It starts with the R. But Lydia Smith, she's a mortgage broker over there. They have a 0% down program in Tennessee and Mississippi as well. So does First Horizon in Michigan, in Tennessee. But there are other programs out there. So they have mortgage programs for people who are in a specific area of expertise as well in career. So if you are a teacher, if you are a fireman, police, first responder, they have grants and stuff for you as well. So one of the ones that they have, let me go back. If you're in Michigan, some of the credit unions do have 0% home loans right now. So if you go to Community West Credit Union, they have a 0% program. So credit unions are great ways to, they'll help you increase your credit score because they're for the people. They will give you the maximum money as well. And they have great programs. The only thing about credit unions sometimes they don't have in-house underwriters. I said sometimes. So it might take your loan a little bit longer to process because they have to outsource the underwriter part. So what's the underwriter? So the underwriter, are the people that actually pushes your loan through the process to go to closing. They don't want to go through the fine tooth combing, even though your mortgage broker should do that up front. Sometimes they miss some things. So the underwriter are the ones that make sure that you go to closing. So that's why I said that you need to make sure you have a relationship with the mortgage brokers, because of the fact that they are the ones that give your paperwork to the underwriter. And if anything is missing, or if anything is not there, they don't do their due diligence, it can hold up your home loan and you won't get your home at all. I've seen people that have been at the closing table and didn't get a home. It was almost me. So I know when I first bought my first house, I was about to leave out the attorney's office with my keys. And they was like, oh, no, hold on. You have a collection from Chase that just popped up. I said, no, I don't. I don't owe Chase any money. And back then, there was like any, email. I mean, it was email, but it wasn't anything that they could email, or, everything was done through fax. So I had to call Chase on the phone. These people were about to close the office. They was like, you're not getting home or whatever. So they could fax over paperwork saying that I didn't owe them anything. And the thing is, on there, it was a collection for zero, for amount of $0. I didn't owe them anything. They knew that. And they just do that collection on there. So you have to understand what you have, what your finances entails, what's on your credit report. You need to know all of that. Be educated. That's why I said do your own research and do your, make sure that you educated on your finances. Go back to my live last week. I talked about that. So like I said, in Michigan, you have Consumer Credit Union has a zero down program. Community West Credit Union has a zero down program as well. So what is it? In Michigan, if you're a teacher, and they have it in Tennessee too, because I used it when I bought my first home, because I'm an educator by day. They have grant programs for down payment assistance for teachers. So if you're an educator, you need to definitely jump on that, because you can get up to $10,000 to buy a home. So if you're waiting, you should not wait. But I'm gonna show you. I'm going to shoot. Here we go. I hope I'm back. I'm going to show you how to think like an investor when you're talking about getting these programs as well, because you can think like an investor by getting these programs too. But they're giving up to, the grants are up to 6,400 where available, and then the down payment assistance they got up to 10,000, and then they have other specialty loan programs just for teachers and educators, in the educator sector. So not only does the teachers do, but the police and firemen, all of that, have it too. So if you're a police officer, firefighter, emergency medical technician, and teachers qualify for what they call the Good Neighbor Next Door program, which is a HUD program, and you can get 50% off a house. Okay, so not only can you qualify for grants to help you with your down payment, if you buy a house that needs revitalization areas, you can get 50% off your home plus the grants. Let me tell you, this is how you think like an investor. Let me go ahead and swing it that way. So you want to buy a home that's for 50% or less, okay? Especially in this economy. And this is the reason why. There are so many different variables that's going on with the interest rates. And if you're in a city like Detroit, like Memphis, and they're revitalizing the area, that's the best place to buy your first home or a home, period. And let me tell you the reason why. A lot of cities like Detroit, like Memphis, like New Orleans as well, St. Louis is doing it too. They are giving people money. The city is like, if you're an investor, put my investor hat on, to revitalize neighborhoods. But if you're a homeowner and you're going to be in that area and you're going to bring some taxes back to that area, they are giving you the same incentives. Basically, you get 50% off a home. You can get the grants to help you buy the down payment, for the down payment and closing costs. So why not do it? Right? So in Detroit, they are revitalizing, all around where they got the greenway that they're building here. Yes, quote unquote. I know. Listen, I'm not telling anybody not to buy a brand new home, spanking brand new. I'm not telling you not to do that. But I'm telling you how to think like an investor so you won't be house poor. So new construction homes are coming up everywhere too, but they are poor quality a lot of times because they're putting up these homes very quickly. And I've toured a lot of these homes and I see imperfections in these homes because I've seen homes down to the studs. I've seen homes that are being revitalized. I've seen brand new ones. So I can see and tell the defects, and they have problems too. And you're buying at a premium when you buy a brand new house, built from the ground up. Now, granted, buy your house, build it from the ground up. I know that's a dream of a lot of people. However, a lot of times you're buying in areas that are equity poor at that moment. And what I mean by that is the house doesn't have built-in equity. So you're basically overpaying sometimes for a home. I can't say in all areas, but in a lot of areas you're overpaying up front and there's no built-in equity. And you have to wait years upon years for your appreciation and you to pay down your mortgage in order for you to get your equity. Whereas if you buy a home in an area where there is revitalization going on and they are building up around that area and you tap in, you have built-in equity. You can get a home loan that will help you rebuild the house, revitalize the house and have your mortgage. It's called a FHA 203K loan. Okay. So what that does is they give you the amount to purchase and amount to fix up. So it's just like having a brand new house, but you have built-in equity. That's how you buy like an investor. You want to do your research on an area that's being revitalized. What's the appreciation? What's the sales around that area? I'm talking about primary property lenders, primary property owners and investors. You can do this for investment properties and also your primary home. So you want to buy a home in those areas because, like I said, you're looking for the appreciation value. Like in Memphis, there's a 1 to 5% appreciation every year, even in the down market. Okay, even when the market is down, Memphis homes still appreciate 1 to 5% in certain areas. It depends on where you are. So you should know that factor. You should know the appreciation factor. You should know how much homes are being sold for. You should know how much homes are valued in that area and what their future value is going to be. That's how you think like an investor when you're buying especially if you're buying your first home, because you want to use it as leverage. Okay, you want to use your first home as leverage, and what you do is buy up. So you buy low first, live in it for a few years, and then buy up. Now you can, or trade up like you do, in a car. Now you can take that first home, and use it as an investment property at that point and rent it out. So that home will be paying for the other big house that you want. But that's what investors do. They buy small first when they first start out. Okay. Then, in order to avoid capital gains taxes, they just elevate. They go up. So they just transfer that one purchase into a larger purchase so they can avoid the capital gains taxes. You could do the same thing as a homeowner, a primary resident. You can do the same thing. Buy that starter home in an area that's being revitalized, that's appreciating, that is going to go up in value. You have instant equity. Then once you stay in and get that equity out, boom, you elevate and you graduate to the bigger house. So then you won't be house poor. That's the whole point. You want built-in equity when you buy your home. You don't want to go in with zero equity or negative equity. A lot of people are going to lose value because they're predicting, the housing market is going to slide, and everything is so volatile because the stock market and all these different things in the economy, all these different things. So in this volatile economy, you want to buy a home with built-in equity. The way you do that, you think like an investor. You go and you find an area that's being revitalized, that's up and coming. Anytime you see a landmark being built, any libraries, government buildings, um, any like skate parks, and they revitalizing the area, that's where you need to focus on. If you see restaurants coming to the area, grocery stores and stores, especially like if you see a Chick-fil-A in the area, Chick-fil-A does their market research. They know where to put their stores. And if it's a rundown area and then you all of a sudden see a Chick-fil-A pop up, you better buy a house in that area. You have to follow the money. When you're thinking about investing in yourself and buying a home, you have to follow the money. Period. And that's in anything. Follow the money. Like I said, any landmarks, any new restaurants, any type of big business, any type of big businesses that come into an area, that's where you want to buy. You have to think like a Whole Food store. Okay. Yeah. So you want to think like an investor in anything. It's all about graduating. It's all about graduating. So I don't want to get too far off, but let me go back to my points. So, like I said, location is key. That's first and foremost. Location is key. And I know it's like a cliche thing in real estate, location, 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 but it's so important. When you're thinking of, that's what investors do. Some investors, depending on what you're trying to do in real estate. So, like if you're trying to buy and hold, of course, you're going to want to do it in the area that's, rent efficient. Like Memphis is a 54% rental market. I don't know how many people knew that. So a lot of people go there to get rentals, right? A lot of them want to stay in the AB neighborhoods, which, are the more affluent neighborhoods where they are flipping houses. So it all depends on your strategy. So as a retail home buyer, what is your strategy, right? So you have to research the area. You want to know the property value. You want to know the future development. You want to know where the schools are. You want to know where the shops are. You want to know where the transportation is. And you want to know the long-term value of your home and rental income if you decide to be a landlord. How much rent can you get? And how much rent is it going to increase? Because rent increase every single year. Apartment complexes do it. Sometimes apartment complexes do it once a month. But generally, rent increases once a year. So you want to buy in an area where you know the property values are going to increase. You want to buy in an area where there's future developments, where there's schools. Because if there's schools, then property taxes are being floated in there, right? Especially brand new schools. That's another landmark that you can look for. You want to know, what's going on in that neighborhood. Like I said, the Greenway that's coming in Detroit. Listen, if you don't buy property in that area, because they downtown got a Gucci store. I lived in Detroit all my life. I moved away, but I came back, and there was never any high end retail downtown like that, besides Macy's. Like, stuff like that. A Gucci store in close proximity to the Greenway. Do you understand what that means? Okay, like you have to, like I said, you have to understand like the new developments and what's going on and what's going around it. Because the closer you are to that, the higher your property value is going to be. And you need to know that what's being built around you. Like in Raleigh, in Memphis, people want to be like, oh, Raleigh this and Raleigh that. You hardly hear any crime or anything going on in Raleigh. And they have a Chick-fil-A, and instead of they got a Chase Bank. Chase they don't put their branch banks just anywhere. They'll put an ATM, but they won't put their branch banks anywhere. Their storefront. So you have to know what's developing in your area. That's why a lot of people are flocking to a lot of people flock to Austin, and people are flocking to South Carolina. They're getting big tech companies there. So anytime you have any big developments, any stores, shops, there's all these different things that's happening in the area, and it seems like it's underneath your nose, and you just see that pop up one day. It's not. You got to do your research. Another thing is, what is your 5-year plan? Investors have a 5-year plan when they purchase a house. So what is your long-term? It's got a long-term perspective. You can do it in 2 years if you want, but 5 years is a great way to have that equity that you want to build up to its maximum. Because this is the reason why I tell you that 5 years to give you a chance to break down your mortgage instead of 30 years to like 10 to 7. And this is how you do that. When you have a mortgage, you have what they call the amortization schedule, right? You have your interest, which is more than your principal. And then you have your principal. And all of them are on lines. Once you go back and look at your amortization schedule and you see what your principal payment is, if you make an extra principal payment during that time of that 5-year plan or that 2-year plan, even if you do it for 2 years, during that time span and you be disciplined, your equity is going to grow faster. Your mortgage years are going to shrink tremendously. Even if you do it for a year. But if you do it for 5, your equity is going to grow so fast that you'll be able to get that mansion. If you're talking about retail, or if you're talking about an investor, you can go out and take that equity that you got from that house and buy that multiplex or that apartment complex that you've been eyeing. That's worth millions that you could probably get for a few $100,000. But in the future it's going to be worth millions. You have to be calculated when you're talking about your money. You have to have a plan. So what is your 5-year plan for your home? Are you planning to stay there and grow it or whatever? But you can knock yours off by paying attention to that amortization schedule, knocking out, taking that extra principal payment, putting it on there. And sometimes you start off small, especially for young folks. If you start off and you only got one, it's only you and your spouse or your significant other, and then all of a sudden you grow and have a kid or two or three, and that house is too small. So, you have to upgrade. That's a way for you to be able to upgrade, because usually upgrades, happen in families. I shouldn't want to say upgrades, but additions usually happen in families between that 2 to 5 year mark. Sometimes it happens a little quicker, depending on whatever. That's a different subject for a different day. But you'll know you'll run out of space and you need to graduate. So that'll help you do that by being disciplined. Another thing is being financially prepared. I teach financial literacy, so I understand. So like an investor, you have to be financially prepared. You have to understand your budget and stick to it. If you have a problem with doing a budget, I can definitely help you. You got to consider all costs, including property taxes, insurance, and maintenance. Now, you should always know the five major, components of your home and how much they cost. What are those? Foundation, electrical, plumbing, roof, HVAC. I'll say it again. You should always know the cost of foundation, plumbing, electrical, roof, HVAC. Those are the five major things that can occur. And I would add on there too, depending on if you buy a fixer upper, hopefully you put new windows in. But windows can be a pretty costly if you have a lot of windows. Because my house, I had a lot of windows, front and back and on the side. So, and then I had a really big, huge one in the front. And then I had some that were like, paned, slotted. So, windows can cost a lot too, but those are the five major components. You need to know how much those things cost. So if your roof is $15,000, a roof doesn't last 30 years anymore, especially with the weather conditions and the things that happen around us. Don't last 30 years. So unless you got a metal roof, like metal roofs last forever, but those regular composite roofs, they don't last 30 years. It's just what it is. So 15, 20-year lifespan, let's just say it like that, right? Especially in Memphis because of the ice storms and stuff like that. And then in Michigan, the treacherous winters and the heavy snow that stays on it sometimes. So you need to know that cost. So if it takes 15 years to replace that roof, and a roof is 15,000, you do the math. You divide it by 15, know how much it costs for a year, and then you break it down for the month. How much do you need to save per month in order to be able to replace your roof? Now, you do have insurance that, you have homeowners insurance and you have home warranties. Those are two different things. You need to have both. Homeowners insurance and home warranty. Now, these insurance companies are getting a little slick. So that's why you need to make sure that you have your money saved. A lot of times they'll find ways not to pay it. They'll be like, oh, this is a factor in that. That's why you need to read your fine print on your insurance policies, especially with these larger insurance companies. You need to read your fine print to see what is covered under what circumstance. Home warranties as well. You might think your refrigerator is covered. You might think your garage door is covered, but it might be components of the garage door. It might just be components of the refrigerator. So you need to know what's covered and definitely get those insurances, but you definitely need to know how much these things cost and save for them in a high yielding savings account, of course. But you need to know the price of HVAC, roof, plumbing, electrical, foundation, because anything can occur. So that's what financial preparedness is. When you buy a home as an investment, you have to think like an investor. So you have to know how much these things cost. And don't leave it up to the experts either. Don't get duped. Know the cost of what you need to replace. And also, the next thing will be future proofing, right? Think about future improvements that you want to make, renovations that you want to make. Maybe you want to redo the kitchen, the bathrooms, the floors. You might want to, paint the brick. You might want to redo, configure, like the bathroom is too small. You might want to configure. You might want to add on. So you need to know the cost of those things too, and know the resale value of those things. Don't over renovate your house and it's not going to be of value. Kitchens, bathrooms are always great upgrades that are resale value. And you need to know what you need to have. Do your research on that. What it needs to look like. You know, all those different things in order for you to have, to have that resale value that you need. Because that's the whole point. If you watch HGTV, I'm an avid HGTVer. How many of you watch HGTV? Me, right? You will tell, like, if you watch the shows that do the renovations, the difference in what it was worth before the renovation and after, because they always do value added renovations. So you need to know those value added renovations. Kitchens and bathrooms are always value add renovations. If you add square footage, that's always a value add renovation. If you have a basement and you finish it, that's always a value added. Everybody likes basements, finished basements. It gives you the added extra space. And in Michigan, basements are everywhere. You know what I mean? So Memphis, not too much, but I don't understand though why Memphis houses don't have basements because of the tornado threat. But I guess because it is on a fault line. So, that's probably why. But anyway, that you need to know what you need, what you can renovate to resale, right? To give you that resale value. And lastly, know the market. I said that from the jump. Know the trends, know the historical data, know the potential shifts. Be a well-informed buyer. Just because you just buying and retailing, you trusting your real estate agent and you trusting the mortgage lender and all of that, know your numbers, know your everything. Okay? Know the market yourself. Know what to do. Know when to buy, when to sell, do all of that. Read up on it, know it, study it. Think like an investor as a retail buyer. So, all in all, I'll recap. So, in order for you to think like an investor while you're buying retail, is first and foremost, you want to buy in the best location. So, location is key. Buying and revitalizing areas, you can get a 50% off discount a lot of times, not just because you're a teacher, fireman, police, or a first responder, but because you're buying smart like an investor too. But if you are uh, in those areas, like me, I'm an educator. If you're a police or fireman or service member, all those people, you can get an extra discount plus the down payment assistance. Why wouldn't you? Stop running away and try to buy the brand new homes all the time and be smart about it and get this built-in equity up front in this market. I'm talking about in this market. Any other time, like if you bought your house like 2-3 years ago, okay, but those might lose value too. So I'm just saying, you want to buy value added property in locations that are improving. So you can get it for less and then you can sell for high. That's what you do. How many stock market people here? You buy low, you sell high. Same thing in real estate. Have your 5-year plan. What do you plan on doing? Is your family going to grow? Can it be rented out? It's a good rental area. How much can you get in rent? Be financially prepared. Know how much your taxes, insurance is, and also how much it's going to cost for you to fix those 5 major areas: foundation, electrical, plumbing, roof, HVAC. Know those. Do future proofing. What can you do to improve your home to give it a value add? Kitchens and bathrooms additions are always great. And the last thing is know your market. Know where you're buying. Know what's the growth, what's the potential, all of those things. So I'm done for today. And yes, share this if you felt like this was some great information. And I would love to, assist you. I can help you all across the United States. If you need a plan on how to become a homeowner and you don't know what your finances look like, I can take a look at your finances and help you do that. If you need some assistance on finding a realtor in your area, I network all the time with realtors. I can find you somebody in your area. I also do, credit repair. So if you need your credit repaired before you get, that's financial preparedness. Let's be real. I had to do it too. I have talked about this before. I had 3 bankruptcies. Okay. Listen, it's terrible. So you need to understand that what your profile needs to have is not just about your credit score, it's about your profile. And, if you need funding for your real estate deals, thank you, Jay. If you need funding for your real estate deals, I can help you with that as well. If you need funding for your business, I can definitely help you with that business credit. I wear a lot of hats. I'm an educator. I'm engrossed in everything that makes money move. I'm just getting into learning how to do the stocks too. So you about to see this. You see this hair. You see these lips. You see this fire. It's about to take off like a rocket. You better try to catch it. You better try to catch me when you can. You better try to catch me. No, I'm just kidding. But no, I'm serious. But no, but seriously, I'm here to serve. So I do have my link in my bio on my Instagram. My link is attached to my Facebook profile, and my link is in my YouTube as well. So I would love to assist. If you know anybody that needs any assistance, I would love to assist. Just listen. I just gave y'all some fire. Thank you for the fire, Jay, in my comments. I just gave y'all. I look like fire. I gave you some fire. Now let's go out and win. And I'll see you tomorrow for Winning Wednesday. Now it's time for lunch. Have a blessed day.